How's it going? Mike Gonzalez here with Texas Trust Mortgage. Time for our Wednesday market report. All right, first off, we're going to start with a little bit of a macro view. We're going to look at the interest rates. This is for the 30-year fixed rate. As you can see, we were at a high back around here at October of 2023. We hit the high. We're bumping right at 8%. And since then, through the rest of 2023, towards the end, we saw a pretty good rate decrease. So we went from a high of about 8 all the way down to a low right around 6.6 in December. Now, keep in mind what really drove this. It was pretty simple back then. We were all talking about the Fed making 6, 4, 7, 8 rate cuts in 2024. And then when we started the quarter, everyone realized, hey, no rate cuts are coming. So we started seeing these starting to come up. Interest rates are inching up. Just real quick on that, I think right now what we're going to see is a lot of folks are thinking, hey, we may have one rate cut at the end of the year. We may have no rate cut. And if you look at some of the polling, we're starting to see some folks even anticipating a rate increase. Hopefully that doesn't happen. But that's kind of what's going out there, and that's kind of the markets are reacting to it. All right, so now let's take a little bit more detailed look at it. This is the mortgage-backed securities. For all of you folks that haven't heard of this before, when you sell a loan, they all get packaged into these big instruments called mortgage-backed securities. And it's really how those are trading. There's a market for them. It's really how those are trading that determine the interest rate. So, and it's a little bit of reverse thinking. If it goes down, mortgage-backed securities, that means the price for the mortgage-backed securities are going down, interest rates are up. So if you want the rates to drop, you want the mortgage-backed security price to go up. Does that make sense? Kind of reverse thinking there. But as you can see, again, here right around the beginning of 2024, we had a little bit of a sell-off. In fact, let's go back 6 months. So here, remember on the interest rates, we saw that the interest rates drop. Here we saw the mortgage-backed securities going up. Nice big fat green candlesticks. That's what everybody wants to see on this. Then we have a little bit of a pullback, and it went up, and now it's coming down. So we zoom in and see where we're going to be here. This is a 2-day. The last candlestick we had on March 9th or 19th was green. So that means we may see better rates. If you have someone who's looking to lock in the rate, you may want to have them watch this trend. Next few days, we're going to have the best pricing within this little cycle right here. All right, mortgage applications. The last time we were at a high was right around November 2021. And then the cliff pretty much happened right around January of 22, then February of 22, going straight down. We kind of been staying here within this trading area of applications. Direct relation. This is the interest rate. Obviously, as interest rates spiked up, applications dropped. Pretty straightforward. All right, now let's look at the metro areas. Let's start off with Austin, Texas. Austin, Texas, median price is actually starting to tick up a bit. So we had a low right around 700,000, 709, and now we're up to 741. Let's look at the segments. The segment kind of breaks them up by home prices, the different tiers. All right, so on the bottom, we have 433, the mid price point 615, the high is 922,000, and the super luxury is 2.1 million in Texas. Now, one thing I wanted to point out, because we're going to see this in all the metro areas, is we have that cycle, that yearly cycle going on. So right around January, we're going to see the lowest prices, and the prices start to inch up a bit to 793, right around June, July. And then we go back down, and then we peak back up again, June, July. So I think we're starting to see that cycle starting to go up when we're getting closer to June, July. So if you have home buyers that are looking about buying, explain this cycle. Tell them, hey, we're at the trough right now. We expect this to go up. These trends have persisted regardless of interest rates. That's more supply and demand, right? Let's see what the inventory in Austin is doing. Inventory in Austin, again, we had shot up to around 3,000. Then we got down to around 2,000, up and then back down. Again, following the yearly cycle. Again, that's driving the prices. Now, here's the one thing I want to share is, notice right here, folks moving into Austin, still pretty strong. I think as long as we continue to have this imbalance of more people moving in than moving out, we're going to continue to see upward pressure on home prices, or at least pretty strong support to not have home prices. Again, home prices are supply and demand. So if you have more folks moving into an area, those are more buyers, especially they're coming from these higher cost areas. They can afford to spend more. The bulk of our folks, again, are coming out from California. They have a ton of equity if they bought or they have the higher salaries. More upward pressure. All right, now let's look at Houston. Houston median price, it's been actually dipping down a bit. Where are we at? 364,000. Again, you can see that their cycles, they're going through the cycles, the yearly cycle, except it's a downward trend on the pricing. That's going to be interesting. Let's look at the segments. All right, so here in the segments, what do we have? The low end, they're 233,000. The mid tier, 319. The upper tier, 425,000. And then you have the luxury, 885 and higher. So it's pretty interesting. Their luxury is right around $1 million. Let's look at their inventory. Inventory's been creeping up. Bumping right around 6,000 right now from a low of right around what, 3,000? Right around 3,000. So they've doubled their inventory since 2022. And let's see what they've done since the beginning of the year, or the trough. Right here, June of 2023, they were right around 45,000. So yeah, pretty good increase. Now, curious on Houston. Again, you have a lot more folks moving into the metro area than moving out. Most of the folks are coming in from, again, LA, New York, San Francisco. Again, high cost areas. So they are able to afford the prices, right? Either they sold or they have the higher incomes. They're coming into somewhere where it's relatively cheaper. So they have the money to kind of keep support for those prices. All right, Dallas, you're up next. All right, Dallas, your median price. Where are we at right now? We're standing at $476,000 median price for homes in the Dallas area. Let's look at the segments. Bottom tier on their segment, 247, 361 mid tier. Their top tier, 635, and then their luxury is 1.8. Very interesting. Let's look at the inventory for them. All right, so their inventory right now, they're right around 2,000. Very similar to Austin. Again, they're following the yearly cycles, except their inventory is going up for the yearly cycle. Who's moving to Dallas? Let's see this. Oh, interesting. So in Dallas, you have inflows 13, 1,100, 1,000. So looks like you still have a net inflow. And they're moving in from, again, the high cost areas. And some of these are moving back to the high cost areas. Last up, San Antonio. What do you got? Median list price. Upward trend on list price. That's good. Right now, they are at 315,000. Let's look at the segments. Their bottom tier is 214,000. Mid tier, 281,000. And then their top tier, 355,000. Their luxury is right around $500,000, a little bit over, 564,000. Let's see their inventory. All right, inventory. Continuing to go up. That's good. Again, following the cycles, but upward trend. They have right around 5,800 properties available for sale. Let's see what are folks moving in or out of San Antonio. Let's see what's going on here. San Antonio housing market. All right. Yeah, so you have definitely more inflow. 9,544, 205, 42, 43. Again, as long as there's more folks moving in than leaving that's one element that's going to keep adding that upward pressure for housing. Because this is all the folks that have bought. All right, so there you go. That's our Wednesday